My next guest came off a panel that was quite bullish, and he holds a different point of view. He's Alex Green, Investment Director for the Oxford Club. Alex, thanks for being with us on Kitco News.
Thanks for having me.
So I have to ask you, did you need security guards after that discussion yesterday?
Not really. I mean, we have an open forum here where everyone's free to say whatever they feel, and I do have some skepticism about whether the bull market in gold that was so strong for so long, whether it's going to continue or whether it's ended.
So let's look at that, Alex. What's your bearish case, or the bearish case that you are making for gold?
Well, the first bearish case I would make is that if the trend is your friend, and you look at what happened to gold, it peaked at 1900, it's coming down. Over the last few years, huge amount of the gold buying has been ETFs, which are seeing liquidations now, and hedge fund managers. Now, the average individual, they buy gold, sometimes they're going to keep it forever. But a hedge fund manager is not thinking long term, and when they believe the party is over, they're going to bail out, and that puts enormous selling pressure on the price of gold.
But what about the other aspects, like money printing, which has driven gold up for so long? Do you not see that continuing?
I do see the money printing continuing, but the question is whether the money printing is going to lead to inflation. For instance, if you look at what's happening in the markets right now, the dollar recently hit a 3-year high. That's anti-inflationary. If you look at the price of inflation-protected Treasury securities, they're coming down, which is a harbinger of lower inflation, not higher inflation. And I think the biggest thing is when people are concerned about government spending, if you look at Japan, they have a government deficit which is almost 3 times the size of ours in relation to GDP, and yet what has been the experience of Japan? Not inflation or hyperinflation, but just the opposite, disinflation. So I think it's a mistake to think that just because the government is spending way too much money, I can readily concede that point, it's a mistake to think that just because that's happening that we're going to see much higher inflation in the future.
But Alex, we've seen gold perform well in deflationary and obviously inflationary environments.
Well, I question, first of all, whether gold is a great inflation hedge. If you look back at gold in 1980, January 1980, it hit $870 an ounce, okay? Inflation was 13% that year. By the December 31st, gold had lost $300 an ounce, and it didn't stop dropping for almost 20 years when it bottomed out at about $240 an ounce in 1999. So that's 20 years where we had inflation year after year after year, and the price of gold went down, right? Now we've seen a recent high in gold again, $1,900. Or thereabouts. And if you think, people who bought gold at $870 when all the hoopla was surrounding gold in 1980 made such a mistake from a 2-decade perspective, are people who are buying gold anywhere close to $1,900 making a mistake again.
So if you're bearish on gold, are you bullish on the US and bullish that Europe will have a recovery and hopeful that tensions in the Middle East will subside?
Well, if we have a bolt out of the blue, if the Middle East blows up, if Egypt enters into a huge civil war and things in Syria spin out of control, then obviously gold can spike. But just looking at the economic fundamentals, the economy is growing too slowly, but that tends to be less inflationary, not more inflationary. Dollars strengthening, commodity prices are coming down. Those are all things that alleviate inflation, not increase it. So I just think, yes, everyone should own gold. It should be a part of their portfolio. But I talk to people who have 30, 40, 50% or more of their assets in gold, and I just think that that's an awfully speculative position to be in.
So were you not surprised by the recent corrections we've seen in gold in April and this month?
I wasn't surprised because remember, gold ran up because of the potential of all kinds of nasty economic scenarios, and with each passing month, we can see that that's less and less likely we're going to have some sort of huge economic collapse. And so I think it's entirely sensible that gold has been backing off, and when you have gold, which has been in the hands of the hot money, like the hedge fund managers and so forth, if you have them now liquidating their positions, that puts pressure on gold, and it wouldn't be surprising for me to see it break $1,000 and tumble even a bit further.
Well, that was my next question. I've seen other analysts say that they could see gold head to $1,000. So if you had to choose a trading range within the end of the year, what would you be looking at?
I couldn't tell you, and I don't think anyone else can tell you either, and I'll tell you why. Gold is one of the most difficult assets to value. It doesn't accrue interest, doesn't generate earnings, doesn't pay dividends, doesn't provide rental income, and so you can't use a price to earnings ratio or a yield to maturity or the typical valuation measures you use with most investments. And so gold will only be worth what someone's willing to pay for it. That gives you the price, it doesn't give you the value. And so I think it's very difficult for anybody to tell you where gold is going to be in 6 months or 6 years.
Well, that's interesting. That's part of the analysis that economist Nouriel Roubini used when he was making his point that he sees gold hitting $1,000 within the next 2 years, that it's really hard to peg a value to gold. So Alex, thank you so much for being with us today. Do you have any final thoughts for investors watching?
Absolutely diversify, have some gold, but spread it around, own some stocks, own some short-term, high-quality bonds, real estate investment trust, TIPS, Treasury inflation, protected securities, and that's your best protection against whatever comes our way.
Thanks for your thoughts today.
Thanks for having me.
And thanks for watching our coverage of Freedom Fest here in Las Vegas. We'll have more for you on Kitco.com. In the meantime, email us at newsfeedback@kitco.com or follow this conversation on Twitter @Daniela Cambone. Thanks for watching.